Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. President Trump sets a 25% tariff on steel and aluminium imports effective from March the 4th. And he warns the rate may go higher, also adding cars and chips could be next. Israel and Hamas accuse each other of violating the terms of the Gaza ceasefire deal. The militant group now saying it will postpone the hostage release until further notice. Plus, no thank you. OpenAI Sam Altman politely rejects a $97 billion takeover bid led by Elon Musk, who says he wants to return it to being a force for good. Well, it's just gone 8 a.m. across the Emirates, everybody. I'm Jumana Versace in Dubai. Well, the markets have had 24 hours to digest the news of the new tariffs, this time on steel and aluminium. Yesterday, President Trump is signing an executive order. So those tariffs will actually come into fruition as of the beginning of March. So what we saw was a better end for Wall Street yesterday. Overnight, the handover and also futures dipping a little bit. S&P futures down about 0.3%. Of note today, apart from tariffs, it was going to be the Fed chair Jerome Powell's semi-annual testimony to Congress. So you want to watch out for some headlines that come out of that, how they're thinking about the progress of the economy and also the inflation outlook, given the signals that came through from the last meeting. So that's going to be a big one. And of course, speaking of inflation, we get the CPI print this week too. So plenty of other things to get through before we get to the end of the week for investors. USD also in focus today, up 7 basis points. I was just looking at a chart of the dollar since September. We have jumped 8%. The dollar has really been on a tear, and a lot of that on back of money pouring in because of the uncertainty around tariffs and because of this U.S. exceptionalism idea that has been so prominent. Gold also yet another record high yesterday. Look, we're getting close to $3,000 now, up about 0.4% this morning. Again, geopolitics, uncertainty, tariffs, all of that playing into that bullion. And then Brent also back in focus today, $76. So we're above $75, staging a bit of a comeback, though, of course, a couple of weeks ago we were closer to $80, this time on a bit of a hit to Russian production. But switching over, though, it's unavoidable, honestly. Tariffs. Take a look at this chart. I thought it was just a really good depiction of how tariffs have come to dominate our lexicon when thinking about the outlook for the year. So tariffs are the topic du jour. This is the number of mentions of the word tariffs in S&P 500 company transcripts. And you can see that over the last couple of months, there have been lots and lots of mentions of tariffs simply because it creates uncertainty for the outlook. And industry leaders, CEOs, need to be cognizant of the impact that tariffs could potentially have on their business. Okay, let's check in also on how markets in Asia are faring. Avril Hong is in our Singapore studio. Bit of a mixed handover today.
Yeah, we're seeing a bit of risk off in the region. The benchmark, excluding Japan, turned negative not so long ago. And we're also seeing, I think, tariffs. You talk about the uncertainty here in this part of the world is really trying to distinguish between threat and action, whether China's going to be in a direct line of fire, not quite in the latest round of tariffs we're hearing from Trump. So Chinese shares are down. We're seeing selling among the Chinese tech names as well, particularly the EV makers. BYD effectively set off a price war by adding a free smart driving system. So we're seeing a lot of the other EV names in China, declines of as much as 10% on some of them. The South Korean gauge has paired gains from earlier on in the session. And part of the risk off is also fueling demands for safe havens. And it's interesting today how the yen is flashing those qualities. It's flat against the greenback, but among the other G10s, it's the top performer. Jumana.
Avril, thank you so much. That was Avril Hong in Singapore. Well, on to the main news again. President Trump has ordered a 25% tariff on steel and aluminium imports, affecting all U.S. imports, including from Canada and Mexico.
So essentially, we're putting on a 25% tariff without exception on all aluminum and all steel. And it's going to mean a lot of businesses are going to be opening in the United States.
And The Brit in me just can't say aluminum. I'm going to stick to aluminium. And he's warned that there are more trade barriers on the way, with cars and chips potentially the next targets. For more, let's bring in Bloomberg senior editor Derek Wallbank. Derek, so now we know that these tariffs are actually going to be applied. What do we know about the scope and the specific countries that will be targeted by the steel and aluminium tariffs?
Well, I think it's really interesting, right, because Trump said that they were going to be coming on. We've heard from the White House that the new deadline for this is March 4th. That's an interesting date because that's also the date that the Canada and Mexico tariffs have been pushed out to. So it does suggest that there's maybe a chance for some negotiation. We're seeing some early hints at that, which I'll get to in a second. Broad strokes, this is a 25% tariff across the board on steel and aluminum imports to the United States. Does not currently have country exceptions at all. In addition to that, Trump also said that he was looking at additional sectoral tariffs. He mentioned chips. He mentioned pharmaceuticals. We've heard those things before, but he did mention them again, and I think that it's particularly notable. If you hear Trump say something at one point, you haven't seen action on it, and he comes back a week later and says, no, we're actually still looking at this, and we're going to have some more over the next 3-4 weeks, that does suggest that it's still on the agenda. But as I said, there may be an opportunity for some carve-outs.
Yeah, well, opportunity for carve-outs, and I know he met with the Australian Prime Minister as well, so maybe there's an opportunity there for Australia to get an exemption. But Derek, more broadly, how should we be reading the shift in focus away from broad brush tariffs towards sector-specific tariffs now?
I do think you should read that as a shift. Trump was saying originally that he wanted to have across-the-board tariffs. Now he's talking about sectoral tariffs, and he's also talking about retaliatory tariffs that are sort of reciprocal, right? You're going to hear the word reciprocal a lot. And what that really means is looking through the U.S. trade ledger and saying, if there are 50% tariffs on insert thing here from insert country there, then the U.S. may slap an equivalent tariff on there so that it's sort of same, right? The idea there is that maybe you can convince those countries to pull those tariffs down, or if not, you'll get revenue from them. That also maybe prevents you from putting tariffs on all of your friends across the world and sparking those sorts of difficulties. At the same time, you mentioned Australia, and it's a great test case here, because Australia is a country that the U.S. has tried to move closer toward with the defense relationship, among other things. And Trump said that purchase of aircraft, and Australia has two big airlines that are headquartered there. They buy a lot of Boeing jets. He was suggesting that aircraft purchases are a way to pull down the trade deficit. That is certainly going to be something to watch across the world as people consider as airlines and countries consider how they're going to be making their orders on those sorts of big purchases.
Yeah, and just bringing it back to the region that I'm in now, I was noticing this morning that as a percentage of GDP, Bahrain is one of the countries that is going to get hit the most from the aluminium exports. So who would have thought? Anyway, fun fact for everybody. Bloomberg's Derek Wallbank, thank you for bringing us the latest on those tariffs. Well, U.S. equity futures are under pressure, while the dollar and gold rally as investors retreat from risk after President Trump's latest tariff moves. So joining us now to discuss is Christian Mueller-Glissmann, Asset Allocation Research Head at Goldman Sachs. Well, it must be quite difficult to be allocating in an environment where there's so much policy uncertainty and so many headlines around tariffs. And the thing is, as I was just discussing with my colleague, he starts somewhere, but you end up in a different place because he expects there to be negotiations on back of his opening gambit. So how do you trade around that?
Yeah, I think generally you try to avoid trading around that and really focusing on building robust portfolios and not market time too much, because there's a big problem with buying the rumor and selling the news type thing. The market tries to anticipate things and there's a lot of twists and turns. So I think generally the best approach in terms of asset allocation is try to find assets that can protect you. And I think the market has done that. The market has bought the dollar, the market has looked at gold. And I think the big challenge is that this is going to be much more difficult from here because the tariffs are very specific. as well.
Yeah, you mentioned gold and the dollar. It sounds like the hedges have done well, but the core portfolio hasn't, right? A 60-40 portfolio towards the end of last year didn't have a good run because of the sell-off in fixed income.
Yeah, I would say it's not terrible. We have to be clear, like, it's about balance. And the fact is actually equities rallied a lot into year-end, and that kind of coincided with bonds selling off. So you could say, on average, like a 60-40 portfolio did all right. And I would even say as well, if you look since the beginning of the year, the bond market has buffered equities in a lot of cases. Like when you had the tariff news last time, the bond market actually did rally and the yield curve flattened. That surprised a lot of people because initially people thought that would be inflation, which kind of would drive higher longer-dated bond yields. And we've been of the view that actually the bond market probably will buffer some of those shocks related to tariffs.
Yeah, so in a way, it has actually served its purpose then, having the 60-40. How are you thinking about fixed income here? 4.5% has seemed to be somewhat of an anchor on both sides. Do you feel that these levels are adequately reflecting the amount of risks out there, be they fiscal, be they term premium, be they the rate cutting cycle? What is your view on fixed income?
I think you have multiple forces currently driving the bond market. On the one hand, you have structurally higher fiscal deficits, higher debt GDP, more bond supply. And if you look in terms of history, like term premium, like the steepness of the curve is still quite low. So you need to rebuild term premium. But this could be a process that takes a long time, like years possibly. So you have in the background this kind of structural factor which is pushing up the back end. But then you also have these uncertainties which are actually anchoring to some extent bond yields. Don't forget, like the kind of tariffs are very bad for the rest of the world.
Yeah.
And that actually drives demand for bonds from the rest of the world, and that can actually help anchor bonds.
So it's really interesting. I was in Davos a couple of weeks ago, and the main theme was one of a lot of optimism around the U.S. This theme of U.S. exceptionalism was everywhere, and people were really downbeat on Europe. You fast forward a couple of weeks, guess which equity markets have outperformed? It's European equity markets outperformed U.S. stock markets. Do you think all of that good news in the U.S. was priced in, so to speak?
I think definitely U.S. exceptionalism across assets, equities, FX, rates, all of those markets somewhat have repriced that over the course of the last year and definitely since the U.S. elections. So it makes it a bit difficult to make progress. And I think in Europe, you just had the bar to surprise to the upside so low. That's the best way to put it. So just this bearishness on its own is already a very short-term catalyst, but it cannot really generate a lot of momentum. In order to generate momentum, you need actual fundamentals to go the right way, either from a cyclical or from a structural point of view. And this is where the US has actually been excelling and keeping doing well, whereas in Europe, the momentum has continued to be quite mixed.
Yeah. So where are you recommending now to put your money?
It's really about diversification. So you mentioned already kind of balance. So we've been very focused about diversification across assets. You might want to sprinkle in some hedges to deal with tariff risks, specific things. So we've been actually liking gold. We've been liking the dollar. But I think with regards to equities, we're very focused on diversification as well. So diversification within, regionally, styles, whatever you can do to try to get away from that concentration from the US. It's tough because it's done really well. People are long the Magnificent Seven, are very reluctant to step away from that. But we've been very focused, for example, in Europe to find quality growth, in Asia maybe find selective AI exposure.
But, you know, when you talk about the U.S. outperformance or potential outperformance, how much of that is on back of fundamentals and how much is simply the fact that you've got the Magnificent Seven stocks that are driving so much of the earnings growth in the S&P 500?
Well, this is the important thing. The Magnificent Seven obviously have very strong fundamentals. And we've done a lot of work showing that the equity valuations in the U.S., in large part, the increases we've seen can be justified by ROE. And the very superior return on equity that the US, because of the Magnificent Seven, has, probably justifies a large amount of the valuation expansion we've seen. Only in the last 6 months are we starting to see US equity valuations overshoot that a bit. So the market is prepaying a bit for even better ROEs from here, which might reflect deregulation, which might reflect further optimism on AI. So you are starting to see a bit of a concern that the market is overpaying.
Yeah, interesting. That's a really good place to leave it. Really fascinating to hear your views on the show today. Christian Mueller-Glissmann, Asset Allocation Research Head at Goldman Sachs. And coming up, concerns rise over the durability of Gaza's fragile truce as Hamas and Israel accuse each other of violations. The details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Israel and Hamas are accusing each other of violating the terms of the Gaza ceasefire deal, piling fresh pressure on a fragile truce. Hamas says the next scheduled release of Israeli hostages on Saturday will now be postponed until further notice. It is accusing Israel of delaying the return of people to northern Gaza, as well as opening fire in different parts of the Strip and denying entry of humanitarian aid. Dan Akhrish is Bloomberg's UAE bureau chief. So let us talk about the actual status of the ceasefire here. Yesterday, Hamas said that they're postponing the release of further hostages. Both sides are now pointing the finger at each other, saying that they've been violating the terms of the agreement. Is the ceasefire agreement actually on the brink of collapse now?
We have known that, and we keep saying that it's fragile, right? These things have happened in the past where Israel delayed the release of some prisoners. And of course, a couple of weeks back, this has happened before. It is still fragile. It hasn't fallen apart. And we saw Israel's response to all of this yesterday was that this is a violation of the terms, and they have asked the army to stay on high alert. Now, we saw Hamas kind of a surprise, right? Because earlier this week, Israel withdrew from the Netzarim corridor, which really divides northern Gaza from the south, and that was kind of crucial for the ceasefire terms. And Hamas's surprise announcement that they're going to delay this, but they also left the door open, and they made the announcement, Monday night, right? We still have a whole week. So they are giving or leaving, like I said, the door open for mediators to try to resolve this. And the ceasefire is still holding. We haven't seen any major violations in terms of firing against each other or Hamas firing at Israel or the other way around. Palestinians are still going back home. But, what Hamas is saying is that the aid is not enough. You are not allowing people to go back to the north, and that they need Israel to address these concerns.
Yeah. Well, President Trump also waded into the debate. Let's listen to what he had to say.
As far as I'm concerned, if all of the hostages aren't returned by Saturday at 12 o'clock, I think it's an appropriate time. I would say cancel it and all bets are off, and let hell break out.
So just to quote, I would cancel it and all bets are off and let all hell break out. He then went on to say that he would consider cutting off foreign aid to Jordan and to Egypt if they didn't accept to host more Palestinian refugees. Now, we know King Abdullah will be meeting with President Trump later today. Is there any way that the Jordanian king can actually convince President Trump to soften his stance vis-a-vis neighboring countries taking on further Palestinian refugees?
It's going to be a very interesting meeting. This is the first meeting between an Arab leader, especially now with Jordan, with Trump since he floated the idea of resettling Palestinians outside of Gaza. And more so with the Hamas and with what Hamas has said, it comes at the backdrop of this idea and the wide rejection we've seen from Arab countries, including the Gulf, including allies of the U.S. Now, just to remember that the U.S. president did claim or take credit for the ceasefire agreement right before his inauguration, though last week, of course, he added to the complexity of all of that. And we have today from, Bloomberg Economics, a really good article about how Jordan and Egypt can actually do away or kind of duck all of these possible cutting of U.S. aid to Jordan or Egypt, saying that the Gulf countries may actually come to support Jordan and Egypt. They have done in the past. We've seen what the UAE had done last year to Egypt, buying Al-Hikma land. We see that Saudi and the UAE are very close to Jordan as well, and they may be able to help out if Trump does decide to cut U.S. aid. So I encourage you to read that article on the terminal. But all in all, it's going to be a very interesting meeting between that first Arab leader and Trump post his remarks, his very controversial remarks on resettling Palestinians in Jordan and Egypt.
Yeah, and of course, after his meeting with the Israeli Prime Minister Netanyahu a week ago. So yes, important meeting taking place today. Dan Akhrish, Bloomberg's UAE bureau chief. Thank you very much. Well, coming up, a profit beat for Aldar Properties. We discuss the real estate landscape in Dubai and the wider region later this hour. Don't miss that exclusive interview at 8:40 a.m. Dubai time. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. President Trump has refused to endorse J.D. Vance as his successor, saying it's too early to make a call. Trump's comments to Fox News came as the vice president visits Europe, attending an AI summit in Paris and preparing to represent the U.S. at the Munich Security Conference.
Right now, do you view Vice President J.D. Vance as your successor, the Republican nominee in 2028?
No, but he's very capable. I mean, I don't think that I think you have a lot of very capable people. So far, I think he's doing a fantastic job. It's too early. We're just starting.
And Meta has begun notifying staff of job cuts, kick-starting a process that will terminate thousands of people as the company cracks down on low performers. Bloomberg understands the Instagram owner is offering U.S.-based employees severance packages that include 16 weeks of salary, in addition to 2 weeks for each year of service. Meta has said it is cutting 5% of its workforce and that the reductions will create headcount for the company to hire the strongest talent. The Middle East was a key region helping boost McDonald's sales in the fourth quarter as growth in the international business made up for a decline in the U.S. The growth snapped 2 straight negative quarters for McDonald's, which were prompted by diners cutting down on restaurant outings and boycotts following the Israel-Hamas war. This latest quarter saw the division that includes Japan and the Middle East post a 4.1% increase in same-store sales. And I'm sure it's nothing to do with our Horizons producers. And Honhai has reported a 3% rise in January sales and strengthened its first quarter outlook. The Taiwanese firm is NVIDIA's main supplier of AI servers and Apple's biggest iPhone assembler. It reported revenue of over $16 billion last month and says first quarter growth will top the average level of the past 5 years. And a quick look at equity futures as we head into the European Open. Today, more red on the boards with all of these indices leaning towards trading in negative territory. But coming up, we're going to be speaking about none other than Elon Musk. We'll be right back. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. President Trump sets a 25% tariff on steel and aluminium imports effective from March the 4th. And he warns the rate may go higher, also adding cars and chips could be next. Israel and Hamas accuse each other of violating the terms of the Gaza ceasefire deal. The militant group now saying it will postpone the hostage release until further notice. Plus, no thank you. OpenAI Sam Altman politely rejects a $97 billion takeover bid led by Elon Musk, who says he wants to return it to being a force for good. It has just gone 8:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. Well, a bit of a negative handover from Asia. We've got S&P futures tilting towards the red today, down 0.2%, perhaps in response to the fact that those tariffs, the latest round of tariffs on steel and aluminium, will actually go into effect as of the beginning of March. I mean, I say they will go into effect, but at this point, it's unclear whether President Trump is using this as a negotiating tactic. But the point is, today, we are seeing a little bit of red on the screens despite the positive end to Wall Street yesterday. Our focus is going to be Powell's semi-annual testimony to Congress. So we're going to talk about that in a moment. And of course, the CPI print later this week. So big drivers for anyone watching the U.S. markets. Bloomberg U.S. dollar up 4 basis points today. But I mentioned earlier in the show, since September, this index is actually up 8%. So a lot of money has been pouring into the greenback and into the USD on that tariff uncertainty and U.S. exceptionalism theme. Gold, yet another record high. We're getting very close to $3,000 here, up 0.3% today. But yesterday was a strong day for the safe haven and continues to be the case, as you can see, green on the board. And then Brent back trading above $76, this time on a production hit to Russian oil. So let's flip over, because I did want to point out to you, it is Powell's testimony over the next couple of days. And the market is going to be watching out for anything they have to say about potential upside surprises to inflation. Remember, At the last FOMC, they sounded a lot more cautious about the path ahead for interest rate cuts, signaled some cautiousness about the inflation trajectory path. And so he will invariably get asked about how he sees the inflation outlook on back of these tariff talks and the potential for a tariff application. So here, this is interesting. 15 FOMC members see a risk of actual hot inflation, something to bear in mind over the next couple of days. All right, let's move on and talk more about what's been happening with these Chinese markets. But today, there's also been a lot of focus on Chinese EV makers, Avril. What is the story there?
Yeah, absolutely. I think they're responsible for a lot of the price action you're seeing, certainly in the spotlight after this highly anticipated event in Shenzhen by BYD, in which it unveiled that it's going to be adding a free smart driving system. So one analyst called this a price cut without a price cut. Is also going to be adding DeepSeek to its EV software, so yet more ways for it to expand further its market share. And amid this, we're seeing the Chinese EV competitors of BYD really getting hard hit today. Geely down 10%, and this is, of course, in the lunch break that we are in. But BYD, before that, we saw 4.5% hitting intraday record high, then pairing the gains amid the overbought levels that we've been seeing the stock recently. Just to put things through the US-China prism for you and in perspective a bit further, take a look at BYD stock this year. It's revved up 20%. Tesla's gone down more than 10%. Part of this to do with its branding taking a hit as Elon Musk comes through with increasingly political statements. So something to keep in mind as we see the divergence in their stocks.
Yep, the EV race continues to heat up over there. Avril Hong in Singapore, thank you so much. Now, OpenAI CEO Sam Altman has rebuffed a $97 billion bid from a group of investors led by Elon Musk to buy the nonprofit that controls the ChatGPT creator. Let's get more with our tech reporter, Annabelle Jewelers. Annabelle, so there's no love lost between these two gentlemen. I've got to say I'm not surprised that Sam Altman turned this down. But what do we know about the deal, and the offer, I should say, and how serious was this offer by Elon Musk to begin with?
Yeah, I mean, you've really hit it on the head. You know, personal grievances aside, we know that these are two people in the tech space that aren't exactly the best of friends. But just on the valuation basis, this is another interesting point to make as well, because as you said, it's a consortium that's being led by Elon Musk, and the offer on the table was for it to be sold for $97.4 billion, or for that consortium to acquire OpenAI. That's the response you're seeing there from Sam Altman saying, no, thank you, but offering, of course, that counter offer for Twitter at $9.74 billion instead. If you remember, Elon Musk acquired Twitter for $44 billion, but of course we hear, outside estimates would say its value is very much diminished from that point. But this really puts it into perspective, because you're taking a look at sort of the estimated valuation of OpenAI, and at around $300 billion at this point. That would be at the point where SoftBank possibly is looking to tip in funds at a valuation of that level. At $250 billion, for instance, that's been mooted as well. So coming in at under $100 billion, it's just not enough to sort of even, really be in the competition of that sort of league. But this is sort of the latest we're getting on that. Yeah, big question really around how realistic this was in the first place.
Yeah, I mean, this all comes on the back of several announcements from OpenAI in the last couple of weeks, and we know that they are looking for a funding round. There was talk of SoftBank also getting involved. What do we know about how this funding process is going?
Yeah, well, we're certainly seeing even greater relationship between SoftBank and OpenAI. Oracle, for instance, they've got their own Project Stargate underway, for instance. There's more reporting today exactly how SoftBank plans to raise financing for that. But in terms of the point as well that Elon Musk is trying to make here, with this bid, and the motivations of it are very interesting to dig into as well. And people we've been speaking to in the industry say that this could really just be a sort of effort for Elon Musk to make a statement of sorts and bring attention to the path that OpenAI is trying to tread here. Because if you recall, and something that really sparked a lot of issues within the company going toward the end of 2023 into early 2024 was the structure of OpenAI and the fact that it was a non-for-profit one. We know they're trying to transition to being a for-profit company, which again will give it greater capacity to fundraise. And a statement from the lawyer representing this Musk-led consortium said that it was really about trying to place outside pressure on OpenAI in that process.
Yeah, and we didn't even mention DeepSeek and also what that could potentially mean for the future valuation of OpenAI as well. Bloomberg tech reporter Annabelle Jewellers in Hong Kong, always good to talk to you. Thank you. Now, markets in South Africa had a rocky start to the week after President Trump froze all U.S. aid. The rand and bonds took a hit, but stocks edged higher as investors focused on the country's economic outlook. Meanwhile, the U.S. says it will continue to fund life-saving AIDS treatments in South Africa as part of PEPFAR, or the President's Emergency Plan for AIDS Relief. Now, Jennifer Zabazaja is our chief Africa correspondent and Horizons friend who joins us now from Johannesburg. Just run us through the ramifications of President Trump's decision to suspend aid on South Africa, and specifically the price action that we saw yesterday across these financial assets.
Right, Jumana, it's really interesting when you zero in on the price action, because if we flash back to a week ago, when we did first get a little bit of direction, or at least verbal targeting from the president of the U.S. to South Africa, we saw the rand plunge almost 2%, and we saw a lot of the discussion around mining in Indaba, which is where I was at, focusing in on the future of bilateral relations between South Africa and the U.S. And as you mentioned, when we got this news on Monday, yesterday, a bit more muted, where I was just looking at the Johannesburg Stock Exchange closed almost to a record high. We saw a muted response from the rand and also bonds. And when we talk to a lot of business leaders here in the country, the focus still is on the fundamentals of this economy and some of the improvements that we heard just about a week ago from President Ramaphosa of South Africa. But still, there is concern about what the future of this relationship looks like. You mentioned PEPFAR there. We have heard President Trump really targeting or being directional, I guess, when it comes to his frustration at this new expropriation law in South Africa. There's also his concerns around South Africa taking Israel to the ICJ. So the concern from business leaders is that potentially this ramps up and this escalates. But still, this is an important relationship for both countries. We should say South Africa is the U.S.'s biggest, most important trading partner on the African continent, biggest trading partner when we look there. And when we look to the U.S., it's very important for South Africa, second biggest trading partner, second to China. So it is important. But a lot of this relationship in the past has been focused on aid. You mentioned PEPFAR there. And so really the focus is going to be on what does this look like going forward, and how do we cool the temperature, as some people told us.
Yeah, Jen, it's going to be interesting to see how this is going to translate into people's perception of the economy, because the theme for the last couple of months, as we've spoken about a lot on this show, is sentiment is turning more positive about the South African economy. There's reduced load shedding, which obviously has been a massive headwind to the economy, but that headwind seems to be somewhat of less of an issue. You talk about the prospects for central bank easing and what that means also for growth. How do you think the actions by the U.S. administration are going to impact investors' sentiment towards the South African economy?
Well, you know, in my discussions with many people over the past few days, they have said that this current spat that we're seeing is a bit, one person described it as manufactured, right? Because the way that President Trump is describing his opposition to this law here is not exactly what it is. And so many people are saying that hopefully investors will see that at the base of this, these are two countries that do need each other. When you look at trade, when you look at aid, you mentioned PEPFAR there. And so hopefully they will be able to move past this. Not only that, South Africa is hosting the G20, the first African nation to host the G20. The expectation is that the U.S. was going to be here. We heard last week that Secretary of State Marco Rubio said he does not plan to come later this week when we do have the foreign ministers meeting. President Trump is expected to come later this year. But again, it is a very important relationship for both sides, both countries. And so investors are really focused then on the fundamentals here, right? If we are seeing an improved economy, if we are seeing energy and other, other parts of this economy improving, is there really a disagreement here? And do these two countries potentially will just move past a lot of the disputes that they have now and focus in on what's actually important for both sides? But we'll have to see. It'll be very interesting.
Yeah. I mean, you've got to dissect the Trump administration comments into one that is specifically directed at South Africa with the tweets and the comments out of President Trump, but then the other is more broad, and that is to do with foreign aid that's affecting many countries around the world. Yeah. Jennifer Zabazaja, our chief Africa correspondent in Johannesburg. I'll see you in just about 20 minutes or so. Now, coming up, it is an earnings beat for Aldar Properties and its full-year results. We will speak exclusively to the group CEO, Talal Al Dhiyebi. Next, this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. UAE property developer Aldar has reported full-year net income of 6.5 billion dirhams, a 48% gain year-on-year, coming in ahead of estimates. Joining us exclusively now is the group CEO of Aldar Properties, Talal Al Dhiyebi. Really good to have you with us. It sounds like it was a very strong year with your full-year profit coming in 48% higher than it was the year before. What is driving this growth?
Good morning, Jumana. Great to be back on Bloomberg. We had a fantastic quarter and a fantastic 2024. In fact, it's been a great stem over the last few years, seeing our net profit almost triple since 2020, EBITDA of more than $2 billion, driven predominantly by our development business. We've seen very strong sales since the very proactive and pro-economy government coming out of COVID, focusing on all these businesses moving to Abu Dhabi, promoting the UAE and Abu Dhabi in particular, and we've been reaping the benefits of that. So as we've increased our sales tenfold over the last 5 years, from $1 billion to $9 billion last year, albeit in new geographies, today we are now plowing through that on a construction activity. We had a big year of handovers last year with 1,000. We have, that's ramping up to 3,000 or 4,000 units per year over the next couple of years. But at the same time, we're balancing that with a very, very strong recurring income business, which has more than doubled over the last few years to just over $11 billion and diversified across key asset classes, including some interesting ones that we're looking to grow, such as logistics.
Okay, interesting. Thanks for the tease there. I do want to ask you, though, about the growth expansion plans, because you started doing more projects in Dubai last year. And I wonder whether that is a reflection of the fact that you feel demand in Abu Dhabi is fully saturated, or is it just a matter of you looking for other geographic locations to continue expanding in as well?
No, absolutely. It's actually a tale of two great cities, Abu Dhabi and Dubai, that complement each other greatly. We're so proud of our ability to go into Dubai, which is one of the most competitive and attractive real estate markets that's out there. We have a fantastic partnership with Dubai Holding, where we acquired 3 sites with them. We've now launched 2 of them, Athlon and Haven, quite successfully. Our third one is coming onto the market in another month, and we're looking to further replenish our land bank. That's on the development side. We're also growing our recurring income business. We purchased a plot on Sheikh Zayed Road to build a prime grade A office tower close to the IFC. We acquired the IFC tower, making us the only landlord to operate in both financial footprints, ADGM and DIFC. And we're growing other parts of the business, like our property and facility management in schools. However, the growth in Abu Dhabi remains very strong. Previously, we've been developing on Yas and Saadiyat, which has been a big driver of growth. We acquired Fahd Island. That's going to be our next major destination. So demand remains strong in Abu Dhabi. As you can see from our results, Jumana, we're growing almost every part of our business, including education, property and facility management, logistics, retail and hotels going through massive transformation as we're seeing new people come to Abu Dhabi, different consumer trends. Tourism is up with the great efforts. Over the next 12 to 18 months, Abu Dhabi is bringing on board another 4 museums to Saadiyat, further cementing itself as the place to visit and live.
Yeah, it's all a very positive story. And my colleague, our real estate reporter, Zainab Fatah, comes on our show a lot talking about just how well the property sector has done in the UAE over the last couple of years. But I do just want to ask you if there are any credit issues beneath the surface and what you're seeing in default rates or the possibility of loan impairments and the outlook for credit, specifically going into 2025, because we are still in a high interest rate environment where financing is tricky to come by.
So I'll give you a couple of metrics. I mean, our sales has grown ninefold over the last 4 years. Our default rate is under 1% with much more aggressive payment plans. But that's also our philosophy of how we try to sell and filter out customers, whether they're end users or investors. We do think that the mortgage market is an area that can be further enhanced and we can have better penetration of mortgages to B2C customers. But at the same time, when you look at major credit providers around the world, one of them being Apollo, that we have a fantastic relationship with, they have now invested more than $1.9 billion in Aldar. So they just recently subscribed to another $500 million on top of their $1.4 billion investment a few years ago. We also raised a $1 billion hybrid instrument, the first company in the region to go out there on the back of our very strong investment grade rating, which shows from a credit appetite for investment grade institutions such as ourselves, the market continues to be very strong and are looking for opportunity, whether that's the story of the UAE and Abu Dhabi or it's the story of well-governed companies like Aldar.
Yeah. What about outside investments? So one of your competitors in the space, Damak, announced that they're investing $20 billion into data centers in the United States. Do you have any plans of your own to invest in the U.S. as well?
Not at the moment. We've expanded over the last few years into Egypt and into the UK. In the UK, we acquired a developer, London Square. We have a credit partnership with Mubadala and Ares that's very thriving and doing extremely well. We have a logistics partnership with Carlyle as well, and that's one of the key focus areas. And we still see a lot of opportunities within the region. We expanded well in the UAE, but we think with what's happening in much closer to home in the GCC, that probably makes more sense for us as the next avenues of growth, Jumana.
Yeah, well, it looks like it's working really well because you ended the year in a very solid shape. So thank you so much for joining us to discuss your earnings. Talal Al Dhiyebi, Group CEO of Aldar Properties. Now, coming up, China's additional tariffs on larger engine vehicles imported from the U.S. are now in effect. We look at the impact on some of the world's biggest automakers next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. China's 10% additional tariffs on larger engine vehicles imported from the U.S. are now in effect, with no sign yet of a proposed call between Presidents Trump and Xi. For more on this, let's bring in Katrina Nicholas, who leads Bloomberg's transport coverage in Asia. So talk us through which automakers are going to be most impacted by this decision.
According to customs data, international manufacturers shipped about 3.1 billion worth of these sort of vehicles with larger engines from the US to China last year. And this additional 10% tariff, that brings the total levy to 25%. It's going to apply to car makers like GM and Ford, and they're names that are already struggling in China. And in particular, it's a problem for GM because actually in a bid to appeal to wealthy Chinese buyers, GM recently launched a premium import service that it's calling Durant Guild, and they're offering vehicles like the GMC Yukon and the Chevrolet Tahoe sports utility vehicle. Both of these are cars that are powered by engines that are 3 litres or more. And so this is particularly problematic for GM. Of course, this also comes at a time when consumers in China are already feeling the pinch on their hip pocket. So making the cost of these cars even more expensive is just going to make them that much more out of reach and that much more unpalatable to the average Chinese consumer. And also, it's, of course, at a time when they have a lot of other local options before them as well.
Yeah, well, and it's not just U.S. automakers, but also BYD in the news today. Just talk us through what has been happening with BYD and their new launch.
Yeah, so BYD held a highly anticipated event on Monday evening in Shenzhen. They are saying it's going to make their God's Eye driver assistance system standard in vehicles priced from about $14,000 and up, including in one of its most popular lower-end models, the Seagull hatchback. So whereas before you've really seen BYD compete on sticker price, being very aggressive both within China and also in the international markets in which it operates, now Chairman Wang Chongfu, he's pushing forward into the world of autonomous driving and making that BYD's next accessible frontier. The fact that this is something that's going to be added at no extra cost across a whole raft of its lineup of vehicles is quite significant, and that I think is what's behind investors sending shares to a real all-time record.
Yeah, Bloomberg's Katrina Nicholas, thank you so much for the overview. Well, coming up in the next hour of Horizons, stay with us because Jennifer Zabazaja will be joining me from Johannesburg. We'll be back in a few moments. This is Bloomberg. Good morning. This is Horizons Middle East and Africa, our top stories this morning. President Trump sets a 25% tariff on steel and aluminium imports effective from March the 12th. And he warns the rate may go higher, also adding cars and chips could be next. Israel and Hamas accuse each other of violating the terms of the Gaza ceasefire deal. The militant group now saying it will postpone the hostage release until further notice. Plus, no thank you. OpenAI's Sam Altman politely rejects a $97 billion takeover bid led by Elon Musk, who says he wants to return it to being a force for good. Good morning again, everybody. It's just gone 9 a.m. across the Emirates. I'm Jumana Versace in Dubai.
And I'm Jennifer Zabazaja in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. And Jumana, we got a bit more insight into these tariffs from President Trump, but still, markets appear to not be taking it in stride, I guess is how we should say it right now.
Yeah, unclear at this point. Maybe a bit of tariff fatigue, as we spoke about yesterday, because even though we had the announcement about 24 hours ago, Wall Street ended the day yesterday in the green. And so far, not doing a whole lot. We're only down about 0.2% in future space. So perhaps it is a case of just wait and see what actually happens. Even though March is the designated beginning of the imposition of these tariffs, who knows what can happen between now and then. So a big question still, and uncertainty has been the theme for investors over the last couple of weeks. But S&P down 0.2% this morning. The USD not doing a lot, but still the theme for the greenback has been one of strength over the last couple of months. And then gold, another record high yesterday, so getting very close to $3,000. All of that uncertainty around geopolitics and tariffs has benefited the safe haven. And then Brent is trading at $76 again. So not quite at the levels we were at a couple of weeks ago. We were close to 80, but still edging its way back. And $75 there seems to be like a bit of an anchor. We're up 0.3% this morning. But switching over, this I thought was quite fun, quite a fun chart to flag. And it just tells you how much attention the word tariffs has been grabbing out of the investment community and also at a CEO level. So this is the number of times the word tariffs has come up in S&P 500 company transcripts. And you can see all of that has happened and really moved up a lot just in the last couple of months. And tells you that one of the major concerns for industry, people in the industry, is what happens with these tariffs. All right, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio. And Avril, just walk us through the handover today and how Asian markets are reacting to news of these tariffs.
Yeah, it's mostly risk off amid the tariff uncertainty. We're seeing the TAIEX, the KOSPI pair, the gains from earlier on in the session, well off session highs. We're seeing China's shares down. I told you through some of the moves in the Chinese EV makers earlier, but I thought I'd also highlight what we're seeing in some of the other tech names, particularly the ones in Taiwan. Some idiosyncratic moves. We had TSMC tempering its outlook as its production took a hit from several quakes in the month of January, but going the other direction, we have Hon Hai, and this is among the big boosts helping the region's benchmark, excluding Japan, to cap declines. This is, of course, a key NVIDIA AI server maker, so it's seen as a bellwether for the build-out of AI infrastructure. It upped its outlook, and it says it expects the first quarter numbers to be better than the past 5 years average. So among the risk-off moves today, thought I'd just highlight some other specific names as well, guys.
Avril, thank you so much. Avril Hong in Singapore.
Now, let's turn back to the U.S. President Trump has ordered a 25% tariff on steel and aluminum imports from next month, affecting all U.S. imports, including from Canada and Mexico.
So essentially, we're putting on a 25% tariff without exception on all aluminum and all steel. And it's going to mean a lot of businesses are going to be opening in the United States.
He's also warned there are more trade barriers on the way, with cars and chips potentially the next targets. For more, let's bring in Bloomberg's Martin Ritchie in Shanghai. So, Martin, we were waiting for a bit more clarity from the president. Did we get all of the questions answered that we needed on what these tariffs could look like in the next few months and weeks?
We actually did get a lot more clarity from the announcement from President Trump and from the proclamation. In fact, I was just scanning through the kind of the text that was released, and really what this amounts to is an extension of and a kind of strengthening of tariffs that Trump himself introduced in 2018. Those were called Section 232 tariffs. They were a big part of Trump's agenda the first time he was in the White House. So there were tariffs on steel and aluminum back then, but a whole bunch of countries or regions, the European Union, Canada, Brazil, Mexico, the UK, Ukraine, were excluded from those tariffs. What the order from yesterday does is include all those nations back in the tariffs and raise the level on aluminum from 10% to 25%. So it's really strengthening a regime using the kind of same logic that Trump had in the earlier term. Also adding a few more products to the list. And the motivation for all of this is the idea that all these exemptions from before just encourage steel or aluminum to come to the US via other routes. So instead of, say, coming from China to the US directly, there would be steel going through other countries. So now we're waiting to see whether there will be any more exemptions this time round. That's the next question.
Well, and Martin, we also heard about potentially a break for Australia. When we think about some of the other countries that could potentially get exemptions, what are the other focuses that we should be zeroing in on?
Australia is the obvious one, just because Trump has already mentioned it himself, and that's because he had a conversation with the Australian leader again recently. I think Australia already had the exemption that I just mentioned in previous years, so that would just be again maintaining their zero level. Canada and Mexico are probably the ones you want to watch, simply because they're very big suppliers of steel and aluminum to the US, and if the US really wants to try and do this without sort of price spikes for those products, you would really want some relief on supplies from there.
Right, exactly. Taking a hit potentially to what a lot of the American people did not vote for, so we'll have to see how that plays out. Bloomberg's Martin Ritchie in Shanghai. Martin, always great to get your reporting on. Thanks so much.
Well, this morning, U.S. equity futures are under pressure while the dollar and gold rally as investors retreat from risk after President Trump's latest tariff moves. Joining us now is Jun Bei Liu, founder of TenCap. Jun Bei, it's really good to have you on the show, and I noticed it's a different fund this time, so congratulations on the launch of your own fund. It's good to be talking to you again. What a time to start trading around these markets. What is your main thesis for how 2025 is going to play out?
Look, we love this kind of markets, and we're very excited, ready to go. In 2025, we do think there will be heightened market volatility, and volatility more to do with the potential sharp policy changes. And tariff is one thing that we have heard so many times, and there's so many changes already, that will drive the sentiment of the markets. But look, taking a step back for investors, this is actually a fantastic time. When you actually think about underlying earnings, underlying economic activity is not doing too badly. In the US, in fact, it's too strong. Actually, it's going quite well. The expectation is for one rate cut, at least there's one rate cut to come. And then we're looking at everywhere else, the smaller companies' earnings momentum started turning positive. So net, I think for the equity market, the underlying fundamental is strong. So where we do have the headline volatility, it is really a great buying opportunity to buy into those sectors and companies where their earnings are leveraged to falling interest rate and also leveraged to a improvement or further improvement in economic activity. So we think it is a great environment for an active fund like ourselves.
Yeah, and let me just ask you, from a hedging perspective, a lot of the havens have been doing quite well. Gold is at a record high. The dollar is up 8% since September. The yen has started to rally as well. Is there any preferred safe haven from your perspective that should outperform in the coming months?
Look, to be honest, I think the safe havens itself, even the Bitcoin itself, is not doing too badly. I think, in the times of heightened volatility, we're happy to hold quite a lot of those assets. Gold itself, we think, is a good place to be, particularly during this sort of environment. We're seeing a lot more activity in the junior gold miner as well. So, within the gold equity, there's actually quite a lot of opportunity within. And then the dollar itself, it certainly has seen the dollar does look like it has strengthened a lot. I know many economists are calling for it to fall, but we kind of feel in this environment, it's actually defensive to hold some of that, the dollar earners. So that's how we see how the portfolio is structured. And then when we talk about opportunities, when times during the sell-off for some of those cyclical businesses, that's when you actually position and buy some of them.
Yeah, you mentioned the dollar earners there. Given the strength of the USD, is that not going to pose a headwind to some of the big tech names which have been leading the charge and leading the rally in the US indices the past year?
I think the tech name is difficult. Look, I do think they're still great businesses. But what's interesting though, in this past results season in the US, that it's the first time that the tech businesses hasn't really delivered too much of an upgrade. It's more or less in line with expectations compared to previous reporting seasons where they outperform. So it certainly comes a time where now it feels a time where technology businesses might just be the funder for everything else. Because of their stretched valuation, because of their earnings no longer getting upgraded, I think there might be a bit of a selling pressure and put into other smaller cyclical businesses from here on.
Yeah, one of the trades that has actually done well in the last couple of weeks is the outperformance of Chinese tech versus US tech. Do you think that outperformance actually has legs? Is it sustainable, or is this just a knee-jerk reaction to DeepSeek?
Look, I think there is a bit of knee-jerk reaction. For Nvidia losing double-digit in share price, it is quite knee-jerk. However, I do think the valuation differential is creating quite a lot of interesting positions, interesting investments there in China. Look, I think the political backdrop will always mean these companies will trade at the discount, the Chinese tech, but they do provide very interesting, opportunity. And they're not only linked to the tech, they also consumer exposure there in China. From what we have heard, the consumer feedback's been pretty strong. The Chinese New Year just passed has had pretty strong, sort of high frequency data and the like. So consumer is doing okay. It's certainly picking up and responding to some of the stimulus that's been in place. So, early signs are these companies might do just a little bit better. However, we may need another stimulus to keep them going in terms of the momentum.
What do you think is the biggest potential obstacle to this outperformance in Chinese equities? Is it the weakness of the renminbi? Is it just the authorities falling behind on the anticipated fiscal stimulus? Or where do you think that headwind can come from?
Look, I think the headwind is really, the consumer, when they won't keep on with that momentum, with the positivity that we have observed in the last few months. Now, for them to continue that positivity, we're certainly expecting another stimulus for them to keep going. The challenge is at the moment, because the tariff has been set, reasonably low compared to the previous expectations. Some are saying that this stimulus may not be as big as needed. So I think the risk is here that the consumer don't receive enough follow-on stimulus to keep that sort of positivity going, then become the self-perpetuating sort of growth. We kind of just need a little bit more to keep them going.
Very clear. Jun Bei Liu, founder of 10Cap, thank you so much for joining our show today. It's always good to talk to you. Now, coming up, concerns rise over the durability of Gaza's fragile truce as Hamas and Israel accuse each other of violations. The details next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasajja in Johannesburg. Israel and Hamas are accusing each other of violating the terms of the Gaza ceasefire deal, piling fresh pressure on an already fragile truce. Hamas says the next scheduled release of Israeli hostages on Saturday will now be postponed until further notice. It's accusing Israel of delaying the return of people to northern Gaza, as well as opening fire in different parts of the Strip and denying entry of humanitarian aid. For more, let's bring in Onar Ant, Bloomberg's managing editor for the Middle East and North Africa. So, Onar, this just shows really how delicate the ceasefire is. In your mind, is this in jeopardy?
As you said, what happened overnight, I think, in Israel does underline the fact that the ceasefire is fragile, as ever. There were accusations from both sides. But I think what was important to note last night was that immediately after Hamas said that it was postponing the hostage release scheduled for Saturday indefinitely or until further notice, it kind of immediately dialed back its earlier statement by saying that it was only trying to send a message that the deal was in jeopardy so that the mediators could be pressured in solving the problems or what Hamas considers to be problems in the implementation of the ceasefire. It shows that the stakes are high for both sides, and it also shows that there is willingness to basically work out the difference. And also what is important to note is that we are halfway through the first 6-week phase of this current ceasefire deal. And we have seen in the past that there were similar accusations from both sides. But the ceasefire at the end of the day prevailed. So I think what happened yesterday does show the ceasefire remains fragile as ever, but it also showed that the stakes are very high for both sides. So we immediately saw a knee-jerk reaction, so to speak, to Israeli accusations from Hamas, which immediately dialed down its earlier statement.
And Onar, we're also hearing from President Trump. He's weighing in here. Let's listen to what he had to say and talk to you after.
As far as I'm concerned, if all of the hostages aren't returned by Saturday at 12 o'clock, I think it's an appropriate time. I would say cancel it and all bets are off and let hell break out.
So let hell break out. Onar, what did you make of those comments there?
Well, there were quite a few comments coming out of the U.S. President Trump yesterday, both these comments and later his interview with Fox News that also aired overnight. It is apparent that President Trump is doing a couple of things at the same time. On the one hand, he shows that he is committed to supporting Israel in its war against Hamas in Gaza. And he is showing to the Palestinian militant group that he will not be there to support, to stop Israel from going back into war should Hamas not live up to the obligations, its own obligations under the current ceasefire. On the other hand, we've also seen him doubling down on his earlier proposal that Palestinians should be encouraged to move out of Gaza so that the Palestinian enclave can be rebuilt, which he says will be great if it's run by the U.S. And later, Palestinians may not even want to go back to the enclave. So I think here he's trying to do a couple of things at the same time. He also called himself the Great Weaver. But the overarching argument of everything that he said is that, look, the ceasefire deal must go on. And if it comes to that, the U.S. will be ready to step in and basically rebuild Gaza if Palestinians move out. And this is being sort of balanced against other priorities in the region, because we also know that he wants lower oil prices, and that's something that he can only get out of basically better relations or better understanding with the countries in the region on which he relies on to move ahead with these plans about Gaza and everything else in the region.
Onur, and really great reporting as always. Bloomberg's managing editor for Middle East and North Africa there. Onur, thanks so much for joining us. Now, coming up, Presight AI delivers record-breaking financial performance for full-year earnings. We'll discuss the results with the CEO next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetti in Dubai. Now for a look at some of the other stories we're following today. President Trump has refused to endorse J.D. Vance as his successor, saying it is too early to make a call. Trump's comments to Fox News came as the vice president visits Europe, attending an AI summit in Paris and preparing to represent the U.S. at the Munich Security Conference.
Right now, do you view Vice President J.D. Vance as your successor, the Republican nominee in 2028?
No, but he's very capable. I mean, I don't think that I think you have a lot of very capable people. So far, I think he's doing a fantastic job. It's too early. We're just starting.
Meta has begun notifying staff of job cuts, kickstarting a process that will terminate thousands of people as the company cracks down on low performers. Bloomberg understands the Instagram owner is offering U.S.-based employees severance packages that include 16 weeks of salary, in addition to 2 weeks for each year of service. Meta has said it's cutting 5% of its workforce and that the reductions will create headcount for the company to hire the strongest talent. The Middle East was a key region helping boost McDonald's sales in the fourth quarter, as growth in the international business made up for a decline in the U.S. The growth snapped 2 straight negative quarters for McDonald's, which were prompted by diners cutting down on restaurant outings and boycotts following the Israel-Hamas war. This latest quarter saw the division that includes Japan and the Middle East post a 4.1% increase in same-store sales. Egypt's inflation slowed only slightly in January, potentially complicating the timing of the central bank's first interest rate cut since 2020. Annual consumer prices in urban areas rose 24% last month. Egypt's central bank has held its base rate at 27.25% since last March, with the next decision due on February the 20th. And Mali has introduced taxes on mobile voice calls and mobile money withdrawals to support its fight against an Islamic insurgency that's threatening to take over parts of the country. Customer recharge for calls will incur a tax of 10%, while mobile money wallet withdrawals will be hit with a 1% levy. The new taxes, together with other revenue measures, are expected to raise roughly $220 million to finance security and energy. And coming up on the show, we are going to be getting the latest on the situation in the Democratic Republic of Congo with Ida Sawyer of the Human Rights Watch. This is Bloomberg.
This is Horizons Middle East and Africa, our top stories this morning. President Trump sets a 25% tariff on steel and aluminum imports effective from March 12th, and he warns the rate may go higher, also adding cars and chips could be next. Israel and Hamas accuse each other of violating the terms of the Gaza ceasefire deal. The militant group now saying it will postpone the hostage release until further notice. Plus, no thank you. OpenAI Sam Altman politely rejects a $97 billion takeover bid led by Elon Musk, who says he wants to return it to being a force for good. It has just gone past 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Jumana Versace in Dubai, where it's just gone 9:30 a.m. Welcome to the second hour of Horizons Middle East and Africa, or the second half of the second hour of the show. And Jen, if it's not President Trump in the headlines, it's Elon Musk in the headlines today. It's one or the other. You take your pick.
Yes, and I actually liked Sam Altman's response. No, thank you. It was polite, right? It was very fascinating to see that.
It was polite,
yeah, as you mentioned, Jumana, it is all about tariffs, really, when we focus in on what the markets are doing. But still, if you take a look at the response from investors, still quite muted, as you can see here right now. If we take a look at U.S. equity futures, trading in the red, still there is this risk-off sentiment that we are seeing following President Trump's commentary about these tariffs. But still not so significant. What we did see from the S&P on Monday, we saw most of the indices actually closing higher in the green despite all of this tariff talk. And this tariff back and forth, we're actually hearing from Morgan Stanley analysts suggesting that potentially the tariffs and the counter tariffs are going to weigh in on oil-intensive parts of the global economy, potentially creating uncertainty over demand. But right now, if we take a look at Brent crude, up just about 0.4%, also paying close attention to what the Rand is doing. Little change right now, as you can see, but still in focus because, of course, we've seen President Trump targeting, at least verbally, South Africa when it comes to aid and potentially what this relationship looks like going forward. But still quite a muted response compared to what we did see last week when we did hear from President Trump speaking about his opposition to some laws here in South Africa. And still a lot of this uncertainty is creating this rush to safe havens, as we've talked about quite a bit with a number of our guests on the show. Gold up just about 0.4%. We also saw here in South Africa on Monday, gold miners closed higher. And again, it's a lot of this uncertainty, but gold climbing to fresh record highs. And as we continue this tariff talk, it's not just us talking about it, Jumana, as this chart is showing. It's quite fun. I don't know if it's fun for these companies, but as you can see on these earnings reports, this is just a chart showing how much we're actually seeing tariffs show up in discussions. Quite the buzzword for a lot of these S&P companies that have been reporting, but not necessarily good because many of them are saying that potentially this will affect their future outlook. But there, just to look at how much this is affecting really the global economy and markets worldwide. But let's pivot to Asia and see how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Avril, what are you watching?
Yeah, we're seeing mostly risk off in the region amid the tariff uncertainty. I talked you through the stock performance earlier, so I thought I'd just highlight the moves across FX. Is looking pretty flat now, but some of these moves were more pronounced earlier, especially for the likes of the Korean won amid the tariff uncertainty. And as some analysts have been highlighting, including the likes of BNY, the Korean won might remain under pressure even without the tariff uncertainty, given the slowing growth momentum in Korea, the expectations of the BOK's rate cut. And of course, when it comes to tariff, front and center has really been China, and investors have been watching out for any signs that China's going to allow some currency depreciation, maybe a way for it to deal with the harsh effects of tariffs. Dollar China today at 7.30, but what was interesting was via the PBOC's yuan fix, it was higher for a third session. So maybe it is loosening the reins on the renminbi a little. And then when it comes to the Japanese yen, it's flat against the greenback, but it's among the best performers in the G10. And I think this speaks to the idea that, and some of our analysts have been highlighting this as well, when it comes to avoiding negative action from the US, it might be Japan faring better against the likes of Canada, for example, especially given the recent Ishiba-Trump summit.
Thanks so much. Avro Hong in Singapore for us there.
Thanks, ladies. Well, turning to AI now, and UAE firm Presight AI has announced results for the full year ending 2024. The company saw record revenue of 2.2 billion dirhams. That is an increase of 24% compared to the year before. Really happy to say that joining us now is Thomas Pramotedham, the CEO of Presight AI. So it's not just revenue that has jumped 24%, but also I see EBITDA has also jumped about 25% as well.
Absolutely.
It speaks to a strong financial year. So walk us through some of the highlights of 2024.
Well, I think 2024 has been a transformational year, and thank you for having us. You know, the revenue numbers and EBITDA numbers speak for clear metrics that beyond the hype of AI, where it's been applied across the UAE domestic market and in the international markets that we work on, it's a true testament to where solutions are really making an impact.
Yeah.
But beyond that, you would see from the metrics that we have, our order book's grown. We signed a total of 3.6 billion dirhams of orders this year in 2024, and of which 23% came from the international market. Right? And moving forward into 2025, we built on a strong 3 billion order book, excluding projects that were signed in Azerbaijan. What is it telling us? It's saying that if you take the solutions and the new technology, like AI, generative AI today, apply it to the verticals that impact the society, so government sectors, financial sectors, energy, smart cities, you would see a creative value that translates back to financial numbers because the solutions that Presight has done brings true value.
Yeah, I'm curious to see that 23% international figure. Which are the markets that have been buying your products?
So right now, Presight has strong focus on the global south market. We have projects now in Jordan and Angola. We continue to build a base in Kazakhstan as part of our Central Asia reach. We have Azerbaijan. Towards the end of the year, our joint venture in Telegrid that looks at smart meter digitization has won a preliminary contract with the Azeri gas companies of 480 million. So the ability to bring digital transformation into global south markets is really where we're seeing good results.
Yeah, interesting. And of course, the very purpose of the company is to use AI to solve real-world problems in energy, finance, and public services, as we were just talking about. Where does the acquisition of the majority stake in AIQ fit into that?
Well, that's where the energy sector is, right? And with that, we have an excellent chairman has joined us, Dr. Sultan Al-Jaber, who's been driving AI and energy for AI. And the acquisition brings about AIQ into the portfolio of Presight, but also brings about ADNOC as a client and partner and a shareholder. What we have done with AIQ is to really transform. We launched the first energy large language model based on agentic AI approach. We're seeing in the 90-day period that we've launched since EDIPAC, true transformation in the fields of reservoir site selection, seismic cube analysis. We're shortening things that used to take processes that took 2 months and a few of engineers down to weeks. So the savings where energy and AI is converging and how energy, AI is making the world better is a true standard we're taking
you speak to the productivity gains there and shorter time frames for getting work done. What about the impact that it's having on people's jobs? Have you seen with your customers that they've reduced headcount to account for the more reliance or more dependence on AI applications?
I think that wouldn't be the right way to look at it. So productivity gain is definitely one impact of AI. And what you're seeing is the adoption of AI assistant. So we are using AI to assist our lives more today to do our job better. The fear that AI will replace workforce, I think it's inaccurate. What you should really look at is how can we do our job better and more efficient and produce higher value results with AI assisting us. So no, I see clients adopting AI more, less so of cutting back on the workforce.
Yeah, let me just ask you about DeepSeek, only because people are talking about it as an advent that has really showcased that the cost of innovation is a lot cheaper. And I've spoken to many people in the last couple of weeks, and they say actually for the consumer it's a positive thing because it leads to the democratization, commoditization of AI applications. But from a cost perspective, do you anticipate DeepSeek to be a bit of a game changer in the industry?
I think you need to pull up the view, not just from DeepSeek, and you look at innovation drive, cost saving, efficiency, and you look at where the open models are. So regardless of what it is, we're going to see more efficient open models that will be available to the greater community, not just the consumers, but developers community. Presight built apply AI solutions, and now we have more models to work on. For instance, in the energy AI large language model, we have to use 33 different models to look at it. So as the cost of models decrease, we focus more time on creating value-added algorithm gains. So it's not just the model, it's what you do with it.
Yeah.
And as the causal model reduces, we can spend more time developing the true value of the specialized tasks you need.
Yeah, it's more targeted application.
It's more targeted, absolutely.
Well, that's a really good place to leave it. Thank you
Yes,
so much for coming on our show today.
Thank you. Thanks for having us.
Really good to chat to you. Very insightful. Thomas Pramotedham, CEO of Presight AI. Thank you. Well, coming up, we get the latest on the situation in the Democratic Republic of Congo with Ida Sawyer of Human Rights Watch. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Calm is holding in the eastern part of DR Congo days after African leaders called for a ceasefire in the country. The city of Bukavu has reopened after bracing for a potential attack by M23 rebels who have already captured the city of Goma. At least 3,000 people have reportedly died in the violence. Now, joining us now is Ida Sawyer, Director of Crisis, Conflict and Arms Division at Human Rights Watch, who is in the capital of the DRC, Kinshasa. So, Ida, great to get you on. You lived in Congo for a number of years. You've seen a number of different rebellions take hold of various cities in the country. Talk to us about what you know about the situation on the ground there.
So, as you said, we've seen for 3 decades now how Rwandan-backed rebellions over the years have carried out widespread abuses against the population in eastern Congo, ethnic massacres, sexual violence, mass rapes, forced recruitment of children, targeted killings, and it goes on and on. We've documented these abuses for years. And now that the M23 is again in full control of Goma, the people are living in fear. They're scared that they could be targeted if they are suspected of being against the M23 or not following their orders. We're now documenting alleged cases of summary executions in the city. And people are also struggling just to get access to water, to food, to basics, to healthcare after having survived several days of really heavy fighting in the city. As you said, up to 3,000 people killed, including combatants and civilians, thousands more injured, struggling to get access to healthcare. It's a very densely populated city of over 1 million people with over 500,000 displaced people who had lived in camps on the outskirts of the city, which have now been dismantled, and the displaced people are also don't know where to go, struggling to get access to aid and assistance and just survive day to day.
Ida, we've heard the M23 say that they are fighting for the rights of Tutsis. We know that they're majority Tutsis that make up the M23, and also potentially protecting Rwanda. Rwanda is supporting them reportedly to protect the country. Are both sides right to be concerned? What do you think about their accusations, at least put out there?
So there have been attacks against Tutsi and perceptions that Congolese Tutsi have been targeted here in Kinshasa and in other parts of the country. There is anti-Rwandan rhetoric that has been exacerbating in recent weeks and months with the fighting that's happening in the east. And the FDLR is an armed group that was originally formed by Rwandan Hutu who had participated in the genocide in 1994. This group is much smaller now. It no longer poses nearly the risk that it had posed in the past to Rwanda. Most of those who participate in the genocide are no longer alive or active fighters. But the Congolese army, some officers have continued to collaborate with the FDLR, provide support to them, and that needs to stop to end these cycles of violence. But at the end of the day, it is all of the Congolese population across eastern Congo who is suffering the most because of Rwanda's backing of this abusive M23 group.
Ida, what does the potential, and this is again reported smuggling of minerals, have to do with this? Because as you mentioned, this has been going on since independence for decades. How does this cycle stop? Is minerals part of the discussion here?
So it does seem to be one of the real motivating factors for why Rwanda is in Eastern Congo now, is to have access to the mineral resources. So especially gold and coltan, much of which transits through Rwanda and then goes on to other countries, especially in the United Arab Emirates. Other members of the Congolese security forces and other armed groups are also involved in smuggling and controlling resources and profiting from them. And the lack of transparency, lack of control over these mineral resources has been a key factor in fueling the conflict. And we need to see real progress in putting that transparency in place, but really holding those abusive armed group leaders and those backing them, holding them to account to end these cycles.
What does that mean from the international community, Ida?
So what we really want to see from the international community is tough pressure on Rwanda for backing this abusive group, so targeted sanctions against Rwandan leaders, reviewing military assistance and other cooperation with Rwanda, showing that there are consequences for their support to this abusive group. We've seen in the past the US, the European Union, and others take strong measures, and that has pushed Rwanda to step back. But we just aren't seeing that this time. So we really want to see more of that pressure, but also on the Congolese government side, they need to stop their collaboration with abusive armed militia groups as well. And we need to see accountability for officers, Congolese security force officers and armed group leaders on the Congolese side who are also responsible for abuses.
Yeah, we should note this has been going on since independence for the country, so definitely something that can potentially be done. Ida Sawyer, really appreciate you joining us, Director of Crisis, Conflict and Arms Division at Human Rights Watch, joining us from Kinshasa.
And Zimbabwe's gold coins have sold above $3,000 for the first time since they were introduced almost 3 years ago. Spot gold rose to a record 2,911, but actually it's even higher now after U.S. President Donald Trump said he plans to impose 25% tariffs on steel and aluminium imports. So for more, Bloomberg's DR Congo joins us now from Kigali, Rwanda. So this is interesting and is an example of people flocking into safe haven demand even within Africa. So what more can you tell us?
Hi, Jumana. So these coins were launched in 2022, and they were having two main reasons. One of them was to curb inflation that had risen to 191% in June of that year, wiping away a significant amount of value from the currency at the time, and also reduce dollar demand and try and stabilize the economy. And it was given the liquid asset status to mean it could easily be changed into cash, traded locally and internationally. And at the time that this coin was launching, 22-karat gold coin, it traded at 1,824. That was in 2022. And prices are going to be determined by the international market prices of gold plus an extra 5% for producing the coin. Fast forward to Monday, it was trading at $3,018 according to data from the Reserve Bank. Many of the coins bought by institutional investors, but also locals who are seeking to hedge their assets against inflation and a deteriorating currency. And like you mentioned, if you look at the international market, the prices of gold are rising. It hit a fresh peak of above 2,942 an ounce. It has surged 11% this year so far. Some of that can be attributed to some of the disruptive trade and geopolitical moves that President Donald Trump has been making, solidifying the place of gold as a safe haven. And if you look at Africa, many of these economies are struggling with high inflation, volatile currencies, heightened political temperatures, and also slow economic growth, all of which make a case for gold.
Fascinating. Bloomberg's DR Congo in Kigali, Rwanda. We're so focused on the price of spot gold, but obviously it's having ramifications all around the globe as people flock into safe havens, I should say. Coming up, Elon Musk sets his sights on OpenAI, bidding for the company he co-founded. But Sam Altman's swift response was far from positive. We'll bring you the story. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasajja in Johannesburg. OpenAI CEO Sam Altman has rebuffed a $97 billion bid from a group of investors led by Elon Musk to buy the nonprofit that controls the ChatGPT creator. Let's get more with our tech reporter, Annabelle Drulers, who's been following this story. So, Annabelle, the fact that Altman turned this down, is that any surprise? He said no, thank you.
Yeah, that's right. I mean, it was quite an interesting and colourful exchange that we saw. There are rebuffal. Look, we know that Elon Musk and Sam Altman certainly have some personal differences, professional differences, but just looking at sort of the valuation alone, no, it's not really so much of a surprise because, as you said, the offer that was put forth by the Elon Musk-led consortium was to buy OpenAI for $97.4 billion. Now, that's under $100 billion. But OpenAI at this point, its valuation is looking even around $300 billion. So you're talking less than a third of that. The response you can see there from Sam Altman. So he said, no, thank you, and offering to buy Twitter as well for $9.74 billion. And I guess that's a little bit tongue-in-cheek because Elon Musk, of course, acquired Twitter, renamed it X, but for $44 billion. And the valuation, of course, according to outside estimates at least, has substantially diminished from that point. So, yeah, I mean, one of the good or the most read stories of the last day, but essentially for good reason as well, because it's certainly got a lot of famous faces in it.
Well, was this actually realistic, Annabelle, coming from Elon Musk? What are analysts saying about the actual bid, the number that he put in here?
Yeah, that's obviously been a talking point, especially going to that point of just how much it's under the current valuation. Look, some of the people that Bloomberg was speaking with said essentially maybe what Elon Musk or the motivation here is to sort of draw attention to the push that OpenAI is making. Because if you recall, OpenAI is a non-for-profit right now, and it's trying to shift into a for-profit structure. That is causing a lot of concern with the likes of Elon Musk, who have sued the company for saying essentially that they've got a monopoly in place, OpenAI and Microsoft working together. So OpenAI or Musk's motivation here, possibly trying to make a statement, draw attention to what OpenAI is doing, but that's sort of, just an outsider's view, I guess, on what's exactly going on.
All right, Bloomberg tech reporter Annabelle Drulers is there in Hong Kong for us. Annabelle, thanks so much for joining us. Let's take a quick check at what your markets are doing ahead of the trading day. We are seeing some red on the screen, as you can see there, both for U.S. equity futures and also Euro Stock 50 futures. Investors are really focused in on these tariff threats, but trying to figure out what is actually going to pan out and in terms of action and what that could potentially mean for corporate earnings, inflation, trade moving forward. So a bit of red on the screen. So we'll pay close attention to how that pans out when the trading day starts later today. But that's it for Horizons Middle East and Africa. I'm Jennifer Zabasajja in Johannesburg with Jumana Bersetchi in Dubai. Stick with us for Daybreak Europe. That's next. This is Bloomberg.